We continue to focus on what's expected from the latest consumer price inflation figures to be released by Statistics South Africa later today. This after the previous data reached a 13-year high. Price pressures in food and fuel remaining on the domestic front, while global inflation is not abating and world central banks are tightening monetary policy as a result of the recession fears that have been sparked. Economist Miyelani Maluleke joins us now to expand on all these dynamics. Miyelani, always a pleasure speaking to you. I think the starting point this time around, when we ask for what exactly is expected in the latest CPI reading, would be the contributing factors at this particular juncture in the South African economy.
Yes, so I think for us, one of the key questions that today's CPI data is supposed to answer as far as inflation dynamics here in South Africa is the 7.8% that we saw in July. Was that the peak or not? Do we start to come down from those levels? We have seen, of course, as you're pointing out to me, Sang, that in a lot of markets around the world, even advanced economies like the US, UK, many parts across Europe, inflation has been on a surge last few months. In most of these places, it reached 40-year highs. So the question is, are we going to see inflation here in South Africa pushing closer to those levels, 9%, 10% as well? And I suppose a little bit of good news here is that the general consensus is that we are unlikely to see that here in South Africa. And the expectation is that the CPI numbers that we're going to see this morning at 10, when STSA releases the numbers, are going to show some moderation. We're forecasting 7.7%, so just a tenth of a percentage point down from July, but consensus actually thinks that the number could be even lower at 7.5%. So the expectation, Tumisang, is that the 7.8% that we saw in July likely represents the peak for South Africa. And the big driver for this moderation that is expected for August is fuel inflation. You will remember that going into August, we did see a little bit of a reduction in fuel prices here in South Africa, and that is really expected to be the big driver of a slight decrease in headline CPI inflation in August.
And how should we welcome a slight decrease in inflation? Because 7.8 to a 7.7 is not necessarily such a big jump, but we do come from the likes of a 7.4 more recently. And as we look at the continuous drop in the price of fuel, then it somewhat indicates an easing of pressure on the rising cost of living. How should we really see that particular decline, and maybe as a precursor of trends to come for the remainder of this year? Just recently, we saw the South African Reserve Bank governor indicating that it may be too early to call this an inflation peak.
Yeah, and I think what he was probably trying to point out is that there's still a lot of uncertainty out there. We still have issues in Ukraine, and we know that a big part of the upside pressure in prices that we've seen, oil prices and food prices as well over the last few months, were a result of the problems that we're having in Ukraine. And those problems haven't really gone away, and it's difficult to tell how issues could unfold there going forward. And I think the governor was trying to highlight some of the ongoing uncertainty that we're seeing as far as some of the big price drivers are concerned. But of course, I think we also have to take into account that even going into September, Tumisang, you'll remember that we did see another fuel price reduction. We're looking at the fuel recovery data for this month, data from the Department of Energy. It looks like we could actually see another fuel price cut as well going into October if things don't change dramatically. So in the near term, it does look like the pressure from fuel prices, which have, of course, been the big driver of that initial increase in headline CPI inflation here, that pressure does seem to be coming down, of course. But I think we do have to remain cautious of the fact that this is an environment that still has a lot of risks. We could still see some volatility in some of these key commodity prices that we care about in the months ahead, given that some of the issues, of course, remain unresolved out there.
And that's exactly what the Monetary Policy Committee is deliberating in its third meeting for this year. We hear from them tomorrow, and the CPI number coming out later this morning is definitely going to be an indicator to what could be their next decision on interest rates. What's the bet from the market?
Yeah. So, like I said, we do expect some moderation. Consensus also expects some moderation. But, you know, at 7.7, 7.5 as the market expects, inflation is still well above that 3 to 6 target band that the South African Reserve Bank wants to see inflation. So at those levels, you know, we believe that, you know, the SARB will continue to tighten monetary policy, will continue to hike interest rates. We expect them to announce a 75 basis point hike tomorrow. Consensus is also expecting a 75 basis point hike. But you're right. I think what comes out of the CPI inflation numbers today will have an important bearing, surely, on how the MPC deliberates about that rate decision. But I think not just for tomorrow, but how quickly inflation comes down will also be important for you know, what the SARB does for interest rates in the meetings after the one this week.
Interesting that you mentioned the 75 bips that's expected by the market from the South African Central Bank. That's what's touted for the U.S. Federal Reserve. They are also coming up with their latest decision, and they saw inflation dropping at a far slower rate than initially expected. What's your take there with the market consensus?
Yeah, in fact, you know, it's interesting to understand. Consensus for the U.S. is also 75 basis points, so they will tell us of their decision a little bit later this evening. But there are some market participants who are actually saying that there is a risk that the U.S. Fed could hike by 100 basis points, and the concern is that although inflation has been coming down in the U.S., you know, last month or so, it's still quite high. Above 8% relative to their target of around 2%. And when you look at real economic activity in the U.S., particularly in the labor market, it's still looking strong. So consensus there is for 75 basis points, but there are some market participants who are concerned that the Fed may actually have to be a bit more aggressive to get inflation in the U.S. You know, closer to that 2% target over the medium term.
Thank you, as always, for your insights. Miyelani Maluleke is an economist with ABSA, talking to us about expectations from the CPI data expected from Stats SA later this morning, as well as the latest decision from both the U.S. Federal Reserve and the South African Reserve Bank on interest rates.